Hi everyone, this is Brian Patrick with ForexTradeAlarms.com, and in today's video I want to take a look at a couple of different ways you might be able to use the RSI or the Relative Strength Index to help you with your trading. Okay, first of all we want to add the RSI indicator to your chart. You want to go to the Insert at the top of your trading platform, go to Indicators, go underneath Oscillators, and choose Relative Strength Index. Okay, and under Parameters, let's start with a period of 14, apply it to close, and I'm going to color it blue in this case. Now you want to have three levels on this indicator, the 70, the 50, and the 30. Okay, now let's say you add it to your chart and no levels are displaying. Okay, I'm just going to delete them all. Okay, there we go. I've got an indicator, no levels. What do? Just click the Add button, type in 70 and enter. Click the Add button again, type in 50 and enter. Click the Add button a third time, type in 30 and enter. Okay, and it will display levels of 70, 50, and 30. Okay, and I like to make my lines dashed. You can do them however you like. Okay, there we go. The RSI with a period of 14 has been added to our chart. Okay, and you can see the 70, 50, and 30 lines are all dashes. We've got a nice big blue line here. Okay, the first way you may want to consider using the RSI indicator is when this blue line crosses the 50 level from below. That signifies that there might be a potential bullish opportunity, a potential buy opportunity. Okay, and in this case I've already had the line drawn on the chart. The price, this candle closed at 1.4255. Okay, let's say you wanted to put a buy trade. I would do my stop loss a few pips below the previous candle. I had a low of 42.36. So let's do 10 pips below. That'd be 26. So you'd be looking at maybe a 25, 30 pip stop loss. Okay, and as you can see here, the price has a nice little uptrend. Let's see, you got in at 42.55. It actually went as high as 43.43. So that's almost almost 90 pips. So that's a nice little move. Okay, now when would you get out of this trade? Well, I'm going to touch on the 70 and the 30 levels in a second, but let's say you wanted to get out of this trade. You were conservative. You say, okay, I'm going to get out of this trade at the 70 level. When this line crosses the 70 level, that indicates that the market is potentially overbought and that the price is going to reverse. Now, you can use a period of perhaps 80 on the high end or 20 on the low end. But let's say you're conservative. You want to get out when that line touches the 70 level. Okay, and that's actually somewhere around, let's say, 4,300. So you got in at 42.55. You got out about 4,300. That's a nice 50 pips there with a 30 pip stop loss. Okay, and now you actually would have been able to get another 40 some pips or so, depending on your criteria. In a situation like this, you may want to sell half your position, and when you reach this level, and move the stop loss to break even, or move the stop loss to 40 pips, or move the stop loss to whatever the price is now, minus a few pips, 10 or 20. You know, use this method to fit your own trading style, and definitely experiment on a demo account before you try to do this live. Okay, now I'm going to switch over to pound dollar on a 4-hour and touch on the 70 and 30 levels a little bit. Okay, and this line has been hovering between the 50 and 70 levels for a while. Okay, it finally touches the 70 level. What does that mean? That the market's potentially overbought and that the price could reverse. Okay, so when the price is down here and reaches up and touches the 70 level here, okay, that's a potential sell opportunity, potential bearish opportunity. Okay, the price went as high as 55.22, and let's say you had a stop loss of let's say 25 pips or so, 55.50, something like that. Okay, so risking 25 pips, goodness, the price, let's say you got in at 55.20, the price went down as low as 52.01. So that's a nice move right there. And again, with a 25 pip stop loss, very nice. Okay, now I want to highlight. I mentioned in a previous example, you got out of the trade when the price touched the 70. Here, you go from 70 to 30. So, okay, let's say you're conservative. You say, okay, when that line touches the 30, I'm going to get out. So you would have gotten out at, let's say, 5,200. So, that's a nice 300 pip move. Okay, and again, we're going to take the opposite example. This line touches the 30. That indicates that the market is potentially oversold and that the price may reverse and go up. Okay, so let's say you got out of that trade with 300 pips or so. You get back in the trade at 5,200 or so. Again, use maybe a 25 pip stop loss, whatever fits your trading style, your money management. So you would have been gotten in at 5202, 5200, something like that. And the price goes all the way up to a high of 54.95. So that's a nice move as well. So again, when this level touches the 70, that means that the market is potentially overbought and that there might be a sell opportunity for you here. And as you can see, the price went down very nicely. Okay, and this level hit the 30. That means that the market's potentially oversold and that it may reverse and then become a buy opportunity. And sure enough, the price had a nice move upwards. So again, you can use the RSI indicator when this line crosses the 50 from below. That's a potential buy opportunity. And actually, you can see here I'll go ahead and add my chart here. The price has crossed the 50 somewhere in here, and look at that. It's crossed the 50. It's kind of been hovering around the 50 for a while, but let's say we move this back a few to right about there. The price crosses the 50 from above, signals a potential sell opportunity, and wow, look at that. That's a nice amount of pips too. Okay. So again, when this line crosses the 50 from either direction, there's a potential buy opportunity here, and it crosses the 50 from above and goes down. That's a potential sell opportunity. When this line hits the 70, the market's potentially overbought, and as you can see, that sell trade worked out very nicely. And the line touched the 30, indicating the potentially oversold condition that the price may reverse and go up, and sure enough, it does. And again, so exit this trade, go from 70 to 30, and so forth. So I hope you've gotten some good information out of this video. I will be touching on the RSI indicator in a couple of more weeks. I want to talk about using some divergence principles. So again, this is Brian Patrick with ForexTradeAlarms.com. I've really enjoyed making this video, and I hope you've enjoyed watching it. And I hope this is another tool that you can add to your trading arsenal. Thank you so much, and we'll see you next time. Bye-bye.